Servant Solutions webinar on the housing allowance, perhaps one of the most misunderstood tax benefits that's available. Today, I've got some friends on the line with me here. I'd love to introduce David Boots to those of you that may not know him. David is served for many years in pastoral ministry as an executive pastor, also oversaw HR benefits for the staff that he worked for. We're thankful to have David because he retired from ministry in that realm and now works for Servant Solutions as our Western representative. So we can all be envious that he lives in Oregon on that beautiful coast. David, welcome.
Thanks, Ellen. It's great to be here.
I'd also like to introduce to you Jerry Fox. Perfect timing, Jerry. Many of you may know Jerry as the Doctor of Personal Financial Planning, taught finance for many years. We are pleased that Jerry retired from that because we nabbed him up to come and be our Director of Financial Planning at Servant Solutions. And Jerry just does an excellent job of guiding people through that process. So Jerry, welcome. We're glad that you're here as well.
Thanks so much, Ellen.
Definitely. We are going to jump into things. Jerry, if you'd like to kick us off.
I will. As Ellen said, I taught at Anderson University, but I came from a pastor's home. And so a lot of you that we're speaking to today, I grew up in the setting that you are in right now and lived with this. One of the things that I learned was that a great advantage to pastors is that in our Internal Revenue Code that determines how much we need to pay in income taxes, there was a provision cut out all the way back in 1921 called the Pastor's Housing Allowance Exemption. And using IRS information, it says this: if you receive as a part of your salary for services as a minister an amount, here's the key, officially designated in advance of payment as a housing allowance, and the amount isn't more than reasonable pay for your services, you can exclude from gross income, when you pay your taxes, the lesser of one of these three amounts. Now, the first one is the amount officially designated in advance of payment, as we said, as a housing allowance. Now, my colleague David is going to explain that in a bit more detail in a minute, what the pastor does and what the church does to determine that amount. The second test is what is fair market rental value for your housing. And that means fully furnished with utilities included. What would, in the market where you're located, what would that bear? The third is what are your actual housing expenses? And you might say, well, what all does that include? That includes, obviously, if you are paying rent, the amount of your rent, if you are paying utilities, anything that's a part of providing for that. If you're buying your own home, it is certainly mortgage, principal, and interest payments. It's real estate taxes. It's homeowners or renters insurance to help protect that property. It is HOA dues or other things that are a part of your community, home improvements, structural maintenance and repairs, putting in a new roof or hot water heater, those things, upkeep on the home and its contents, lots more things than most people think. But you have to keep track of what those expenses are. And David, I know, is going to mention a little bit more of that as well. But the key idea is this: it's the lesser of those three things. What was designated as a housing allowance, the fair market rental value, or your actual expenses. And so whatever amount of that adds up to the highest amount that is still within those bounds, you can exclude from taxable income for income taxes. David, how do we determine that?
Thanks, Jerry. Great information there. When it comes to setting the amount as housing, it's not always clear. And I've experienced that in my church ministry. Often there would be some confusion. Well, is this up to the pastor? Is this up to the church to do it? So I just want to hit a couple of these areas, a couple of points on where the responsibility lies, what exactly we need to do. Jerry, as you mentioned clearly, the employee is the one that sets the housing amount. So that's an area of confusion at times. Sometimes when a church hires a pastor, they'll say, we will pay you X dollars for salary and X dollars for housing. But the fact is, the church really just needs to offer a salary plus housing amount. That's what you would want to talk about when you become employed with an organization, a church. And then at that point, it's up to the employee or the pastor to set that amount. And then the church really just acknowledges that and approves it. By the way, before we forget, on our website at servantsolutions.org, there's a drop-down tab that says Learning Center. And under that, you'll find a housing allowance line. And there's a lot of great information in there, even a short video clip. But you can find a form to help you in determining those numbers, Jerry, that you talked about, all the things. That way we don't leave anything on the table. But the responsibility is up to me as the minister to set. I come up with an amount and then I submit that through the proper channels. And that's really internal issues with the church. The church can have a form, they can ask for an email, so it's time stamped. I basically say, and it's not up to the church even to have my details. It's that worksheet is for me. The church doesn't need to know that I'm spending X dollars for electricity or whatever. I use that worksheet as a calculation. I just say at the end of the day, I want to designate $10,000 as housing allowance or whatever that number is. Then once I have done that, and knowing that the responsibility is up to me to set it and it's up to me to document that, I give that amount to the church, submit it to the administration of the church. Then the board declares that in official minutes. Generally, we suggest it's either done in a December or January meeting if your fiscal year is January, or it's done in the June, July if it's in the mid-year. But anyhow, it should be done at the beginning of the year, the amount. The employer's responsibilities, the minister is to set the amount and to prove your receipts, you used what you said you would use. The employer's responsibility is to designate it in the minutes officially, and then mark that designated amount on each pay stub through the year. So you would there are two lines. By the way, it's just important to have that clarity for churches. The box 1 of W-2 will not include the amount that's designated as housing. That's in box 14. And that really isn't even mandatory. That's just that's to give assistance when you're prepping your taxes. Box 1 plus box 14, salary plus housing, should equal your total compensation. And that's also needed a little bit later on when you calculate your SECA tax, which is Medicare. So anyhow, it's up to the church to do that. And then the third responsibility of the church is to issue the W-2 without that on the amount in box 1, which I mentioned. Jerry, you got some other things to share with us about?
I did. The key thing that you said there, David, is it needs to happen before the calendar year as you look forward, because you heard me say it has to be in advance of payment. It also, on the flip side of that, you can only take, if you're looking at actual expenses, in that calendar year. So again, people who are maybe having a roof replaced, and you have to determine what year does that fall under, and have I accounted for enough for that within my housing allowance for that year, that it can only be dollars that were expended in that year counted in the housing allowance. So that's a key idea.
Yep.
Now, another key thing is who qualifies for this as you begin thinking about it. Who does this apply to? I want to give a shout out to Amy Artiga. Amy is the creator and host of The Pastor's Wallet, wonderful website, pastorswallet.com. And I think Amy's actually on this with us today and hearing that. Amy, I want to tell you, you provide a lot of great information that supplements what we have on our website. And so I want to encourage people to look there. But one of the things that Amy notes on there in her pocket guide to housing allowance is that in the case of who's eligible, it's for a minister of the gospel. It's interesting. That's in our IRS code. It says a minister of the gospel must be ordained, licensed, or commissioned by a religious body constituting a church or denomination. Do you hear that? Ordained, licensed, or commissioned. So missionaries that are commissioned on the behalf of a church body. And it says that they have the authority to conduct religious worship, perform sacramental functions, administer ordinances or sacraments according to the prescribed tenets and practices of that church. Now, for bivocational pastors, this becomes important. And we've got a number of people, members in our plan that are bivocational. Only what you receive as compensation for ministerial services qualifies for the housing allowance. Now, it can be 100% of what you're paid, particularly if a lot of your income comes from your second job to do that. But that's a key element. Who qualifies for that?
If I could interrupt here just for a moment, I failed to mention at the front end, we are taking questions during the webinar. I've already got a couple that have popped up, but wanted to make sure that you knew, please use the question and answer space at the bottom. You can click on that, it will pop up and you're able to answer or enter your question. We will try our best to get to each question at the end of the webinar. David?
Right. Yeah, hey, just a couple of other random things, and then we'll move on into the Q&A. These are just some bullet points that I was thinking about in preparing for this. So while our qualifying housing allowance is excludable from federal and state tax, you do and you must include your housing allowance amount when you calculate your CECA tax. CECA is another name; it's self-employment tax, but it's another name for Social Security and Medicare. So it's important to know that assuming I did not opt out of Social Security, then I need to take the total amount. After I do my regular tax calculations, it's time for me to pay my self-employment tax. And I have to take the full amount of box 1 and box 14, or my housing allowance and my salary. So just wanted to hit that. We did not want to miss out on that one.
And
Jerry.
David, I just want to add to that too. What if your church provides a parsonage for you? Okay, and you look at that. This is where the IRS looks and says, what is the fair market rental value if that parsonage was rented out to someone else? Because even though you're not seeing that as compensation for your CECA tax, they do see the value of that as compensation to you. And so that must be included in determining that.
Yeah, that's a great point, Jerry. Thanks for clarifying that as well. You know, I want to recommend as a pastor of 36 years that did this and did taxes like most of you online here are doing. I want to recommend to always, if you're not, set your housing allowance amount higher than you actually just calculate at first blush. You know, I like to say 10 to 15% higher. There's really no downside to it because you're going to pay taxes on what you don't use anyhow at the end of the day. Jerry, you mentioned this earlier when we started on the call. If you don't set it high enough, if I set a housing allowance of $10,000 and I end up needing to replace a partial roof or a water heater or a furnace or whatever, and I have another $6,000 expenses that year, if I haven't set it high enough, I can't claim that. I'm going to pay taxes on that money. That's why it's so important to raise your housing allowance high enough to allow for some of those incidental, unanticipated expenses to come. That way, you've got it covered all under housing, and you will not pay taxes on that money so long as you can verify your expenses and things like that. And as long as it doesn't go over the fair market rental value, that's kind of a litmus test. By the way, when we talk about fair market rental value, keep in mind that is fully furnished.
Right.
So we can't just
utilities.
With utilities, like everything, even if we're not renting, if we own, it's in a sense, it's apples to apples from the standpoint is you take the rental value of an empty property and then you add in utilities, furnishings, all of those things that you do. Anything you do even to improve the property, if you have an agreement with a landlord, some people will get in and have a great agreement where they'll do the maintenance and upkeep or whatever. All of that, you're able to include that when you're calculating your housing allowance. So anyhow, keep in mind, shoot a little high, and then at the end of the year, if you set $15,000 housing allowance and you end up using $10,000, you will just pay taxes on that additional $5,000 later on your 1040 form. It really comes out. I've used tax software most all my ministry life, and really, as you calculate it, once it knows you're a minister, when you put that information in, it actually says, how much did you set for housing? How much did you actually use? And that delta goes onto your 1040 form automatically as additional income. And it's usually, mine always says unused housing, unused clergy housing allowance, something like that. So good reason to go high. A couple other things about housing allowance in retirement. Some of us on the call are either in retirement or we're getting very close to that. And can I receive my retirement savings as housing allowance? Absolutely, yes. Often that's something that's not talked about and it gets overlooked. But as long as it's in a church plan, and as long as you earned the money for ministerial services that Jerry talked about at the beginning, you qualified for minister, that money was paid to you for doing ministerial work. And so you can receive that back out as as housing allowance, which means you don't pay taxes on it once again when you pull it out. But the important thing is that it is from ministry related income. And if it's in a church plan, and Servant Solutions, by the way, is a church plan. That's why we're designated 403B9. Jerry, comment?
I was just going to say, David, one of the ways I've explained this that seems to help people a lot is we are a nonprofit ministry. And so in retirement, we essentially become your employer when you're an ordained pastor or licensed clergy person. So we say everything that we submit to you in your withdrawals or benefits in retirement is eligible for the housing allowance up to the limits of fair market value or your actual expenses.
Great point. And that brings up an issue. Let's just say you are anticipating retirement soon and you wonder, well, then how does that get set if I'm no longer at my church and I don't have a board that's designating that? When you actually apply to receive your retirement income from Servant Solutions, unless you clarify that you want some taken as taxable and some not, it's going to come to you as it's going to show your 1099-R, which is your tax form in retirement. Your 1099-R will come out and it'll show the amount that was paid out to you, and there will be a box checked. It says taxable amount not determined, and in a sense, what that means is IRS, we paid David Boots $10,000 this year and the taxable amount is not determined. Then I take that in calculating my taxes and I say, here is my $10,000 of housing allowance justification. And so I'm doing it similar to the way I did with an employer, only it's coming on that 1099-R and it's not marked as having obligated to pay taxes on it. Does Servant Solutions set or declare my amount? Again, just there's no confusion. Unless you designate otherwise, Servant Solutions will pay whatever you tell them out as your monthly amount as housing allowance. But again, that you have that option when you first apply for that. Ellen, do you have any comments on that? Because you've been involved on that end as well.
Yeah, great questions. Matter of fact, I'm going to go directly to some of the questions. We folks actually have over 30 questions already submitted. Wow. So needless to say, this is an important issue. I do want to say as well, we are already 18 minutes into our time. We want to be respectful of your time, so we will begin answering some questions. But I want you to know, for every person who submits a question, we will answer it personally if we don't get to it during this webinar. So if at any point you do need to leave, just know that those questions will be answered. But let's dive in. First off, we have the question, Jerry, do I need to declare a housing allowance every year?
Not necessarily. You need to determine what it is, and it can say in the board minutes, this is the housing allowance that we have determined for a pastor's compensation in perpetuity unless changed. You can set it up in a way that it just carries from year to year. Some have done that as a specific dollar amount, others as a percentage of pastoral compensation. But no, you don't have to every year. It might be wise to revisit it every year and see if it needs to be updated.
Excellent. Yeah, great point. Along with that, David, can I change my allowance mid-year? We kind of brushed up against that, but didn't really get to the answer. If you don't mind.
In fact, I saw a couple of questions come in on that. And yes, you can. Again, it's a matter of board action and it's a matter of having it changed before you need it. So if you are mid-year and you set a housing allowance and all at once unexpected expense, you know that you have to do something and your expense is coming up in a month or 3 or whatever, so you could raise it to cover that. You just have to know that there's enough year left in your pay periods to be able to pay you that amount. In other words, if you're already 3/4 of the way through the year and you want to raise your housing allowance $10,000, but you may not have $10,000 more of income coming this year. But yes, if you know it's going to change, as long as you have board action and they can redesignate that in advance.
Excellent. Thank you very much. Jerry, and again, we mentioned this, but let's clarify. What if I have fewer expenses at the end of the year than what I set for my housing allowance?
No problem at all. As long as you have kept those records, and so you know what that amount is, on the 1040 form, when you're filling out your income tax return, line H under the income section, which is line 1, but section H, is a place for other income. And as David says, you can say unused housing allowance and just show I had $2,000 that I had reserved as housing allowance I didn't use, and declare that as income.
Excellent. So as David said earlier, it's always good to estimate high just in case.
Yeah,
Great,
there's no
excellent.
downside to being overestimated. No.
Right. But we don't want to go in super high. Any reasons for that? Why not just declare 100% every year? David?
Well, because well, first of all, it has to be reasonable compensation. So the
That's
church
right.
say, wait a minute, that's not reasonable. But the other reason would be is if you put it super high, remember when we pay quarterly taxes as ministers, or some of us, I actually didn't pay quarterlies after my first year in the ministry. I voluntarily had mine withheld on every paycheck. But whenever we have that amount withheld, it's documenting it to go back and say, I declared a well, that's a large amount, $40,000 housing allowance, but I only used 10. I now owe taxes on the difference.
Right.
And if I haven't paid the minimum liability for taxes that year, then I'm really on the hook for possibly some penalties. So it's good to keep it close within a few percent.
Great, excellent. Jerry, what if I leave the ministry in the future to enter a non-ministry occupation? Can I still leave my account with Servant Solutions until retirement?
Absolutely. You're always welcome to leave it with us to do that. And in fact, let me just bring this up. A lot of people, once your account balance has gotten pretty high, you become a very attractive target to a lot of investment managers. And they'll try and encourage you to, hey, move here, I can get you a little higher return. You give up an awful lot of important benefits, particularly that a church plan like ours can offer that other IRAs can't offer, other 401ks may not offer. So I would really encourage people, unless there's a really good reason to roll into another plan because of some matching or something, and that's so rare, I would really encourage people to leave their funds here, especially if it was ministry earned funds and you are still recognized, even if you're not currently in a church or pastoring, if you're still recognized as licensed, ordained, or commissioned in retirement, it can still qualify for that housing allowance exemption.
Great, excellent. That's an important point. I'm glad you mentioned that. The IRS sees you, if you're ordained during your ministry years, you're still ordained in retirement years. Right. Great thought. David, as a spouse of a deceased pastor, am I eligible to receive a housing allowance?
Not if you were not in ministerial income and it was not if it wasn't your income. It's so spouses, that I'm glad that question came up, by the way. So spouses would need to pay income tax on a deceased minister's retirement distributions.
And as a pastor's spouse, I'd like to argue that, but you're correct according to the IRS.
I understand.
We have some great questions here, and a lot of them have to do with retirement and how do I record it during retirement? How does it work for retired pastors? So Jerry, if you'll speak a little bit about that. A pastor who has worked in ministry his whole career, he's in retirement, wants to take distributions out. What does he need to do at that point?
Well, one of the very first things is when you're approaching retirement and want to know what kind of resources you have available and how to begin drawing those out, I hope you'll contact us. We offer free financial planning services at any age to any of our members, and we'll kind of look at where you are at that stage of life. But as you approach retirement, it becomes even more important. And that's where we can begin looking at, well, what are your housing plans in retirement? What kind of expenses are you going to have to provide shelter for yourself during those years? Let's plan that the amount that you are taking out that can qualify for the housing allowance that we've structured that in the right way, that you're paying no taxes on it. And we can kind of help you do that calculation as you look at that. Now you look at other expenses and you might say, I have this much coming from Social Security. I have this much coming from a rental property that I have. And so my actual needs that I will apply to housing, maybe 100% of what I take from Servant Solutions will qualify for the housing allowance. And so we like to help people look at the whole picture and make sure they're, from a tax standpoint, doing it in the most efficient way.
Excellent. David, if a home improvement is financed at 0%, deferring the cash flow, do I claim that amount during the year I purchased it or during the year that the cash flows out?
Oh gosh, but now we're getting some good questions. Will you read me one more time, Ellen?
Yes, I sure will. And just so you know, I actually had this experience because my husband is a pastor and had to look it up because I wasn't sure. But if a home improvement is financed at 0%, deferring the cash flow, am I going to claim that the year that I purchased it or the year that the cash is going out? So
I would go for the year the cash is going out. But Ellen, if you have experience in that, please speak to it.
Yeah. Go ahead, Jerry. Go ahead.
That's exactly right, because the IRS says it has to be in the year that the actual cash flowed.
Finances,
You can only claim it there.
Yes.
Ellen, I'm going to add a related thing. A lot of people will say, I want to take out a home equity line of credit.
Great.
And as I'm paying that back, does that count under the housing allowance? And the answer is yes, if what you took that money out for was for a housing related expense. So it is replacing the roof or replacing the air conditioner, then it is. But if you took out a home equity line of credit and used that money to go on vacation, it is not falling under the housing allowance, even as you pay back that home equity line. Even though the word home is in there, it has to be used in that year for housing related expenses.
Great thought. Great addition. In retirement years, can housing withdrawals from Servant Solutions satisfy my RMD, my required minimum distributions?
That's Jerry's.
Absolutely. Some of you, if you're not familiar with that concept, the IRS, because the money that you have invested with Servant Solutions is invested and grows every year tax-free. You don't pay any taxes on the growth of your investment until you begin withdrawing and taking it in retirement. And again, not even then if it's used for housing allowance. But when you hit age 73 and you say, I still don't need to withdraw any of my money. My Social Security is enough, or I have other resources, I'm going to leave my money there at Servant Solutions. At age 73, the IRS says you have to take out at least a minimum distribution and then pay taxes on it. But if you take it out as housing allowance, you still don't pay tax.
Excellent.
Good.
We've got some really good ones. David, did you want to add something?
No, let's go on. Let's keep getting through them. There's a lot.
Great. When receiving Social Security benefits at full retirement age and not earning a salary from other sources, how is a housing allowance utilized? So they're receiving Social Security benefits at retirement age. They're not earning a salary from other sources. How can the housing allowance be utilized?
Oh, I can respond to that. You would utilize it in the same way. In other words, even if you're not paying rent or your house is paid off, you still have expenses. So you can still, whatever the expenses you are to provide a home for you. Again, the least amount in this case, Jerry talked about our opening comments, the least amount would be your actual expenses. So you want to look at your utilities, your maintenance, your upkeep, things like that. So yes, you can use your housing in retirement.
Great.
Good
question.
Let me add just one little bit to that.
Sure.
As we said, almost anything that is housing related is counted in those actual expenses. I mean, if you're replacing light bulbs, if you had to buy a new lawnmower to maintain the yard, almost anything, the very few things that are not, if you are paying for maid service, or if there is anything that is of a personal benefit, like clothing and things like that, you cannot. But most things that are a part of owning and operating and maintaining a home are. And so I know you've got an envelope that you throw every receipt in, David.
Exactly. Every
Yeah.
receipt at the end of the
Yeah.
year, I at least have everything in one place. Then I get
Right.
online to each of my utility bills, pull that up and print that
Yeah.
out. So I have all that in one place for tax prep.
Right.
Yeah, exactly. We talked earlier about the fair market rental value. It's really good to contact your local real estate agent to get that amount. But the question is, what recommendations do you have for all those other things? And we've touched on that. The realtor is only going to give you the fair market rental value. They can't do your expenses as far as your utilities, your repairs. That's all personal. So it's a combination of the realtor's recommendation, if you will, for amount, and then your actual expenses that you've spent.
Good.
Yeah.
Good point,
Any
Ellen.
other thoughts on that?
Great point.
Okay,
Well,
great.
I'll just say that there are a number of sites. Good realtors are invaluable there. Zillow is a good place to start when you begin looking and saying, what are rentals in my area even running for? And I'll tell you, they're a lot higher than people often estimate, and especially if you look fully furnished with utilities included.
Mm-hmm.
Hey,
Yeah,
Ellen,
very true.
I wanted to jump back. We talked about the envelope method. I call it the envelope method of keeping track. Also, and you might, I hate to ask you this question, put you on the spot, but I believe on our website there's a housing allowance worksheet, isn't there? Because I did see a question where someone wanted to know about a recommended documentation for keeping track. It's just a spreadsheet, folks, and it has a column and every month and all your expenses. I think that's a great tool. And put everything in there. It auto calculates each month, and you can see throughout the year. You can even do a hypothetical preliminary if you're just starting into ministry or just starting housing, just to get an idea of where to start with an amount.
Great. One more question about being in retirement. How do you go about setting your housing allowance amount?
In retirement?
Yes. In other words, they're used to giving it to the church, to declaring their amount to the church. In retirement, how does that happen?
I hit that one, and that is when you actually apply to receive your funds back. So I'm retiring next month, and I want to let Servant Solutions know how much I want every month in retirement. And when I do that, I have an option to say I want this received as housing allowance, or I want this as housing and this is salary. Otherwise, Servant Solutions defaults to giving it all to you, not withholding anything, not reporting to the IRS other than a 1099-R that says, this is the amount that David Boots got in the last year, and it has not been taxed, or taxes have not been withheld on it. And then it's up to me to do that. So essentially it's almost automatic, if you will. You don't do the every year, you don't do a turn in my housing allowance form.
Right.
Great. Are there ever any circumstances where it does not pay for an ordained pastor to utilize the housing allowance?
I know that there are some websites I've seen where people have crunched numbers to see if they're better off not utilizing it, but I have not personally, in my years of ministry with all the pastors that I've worked with, I've not yet come across anyone that has said I'm better off not doing housing allowance, because it's sheltering that amount of money from your federal and state taxes. So Jerry, any thoughts on that?
I'd be hard pressed to think of a scenario where it's a benefit to not take advantage of that tax break.
Yeah.
If you were eligible for it. I wish I was eligible for it, and I am not.
Yeah. The only scenario I can think of would be those who have large families with lots of children, lots of deductions, and their salaries very low, maybe even part-time. That has come up before, but you're right. There are very few scenarios where it is not of benefit.
That's right.
Yeah. Okay.
Ellen,
And even there, to take it there, it'd be rare that even in that case, taking no housing allowance would still be beneficial. You can maybe minimize what it is because you're trying to maximize some other tax breaks that are limited by that. But
That's good.
Good question.
Yeah, it is.
David, what were you going to add?
What came to my mind was Form 1099. And I want to throw this right here on the table for us to talk about for a minute. I'd love to hear from you, Jerry, especially on this. What Servant Solutions, we do all we can do to remind people that in order for you to save dollars pre-tax when you are working in ministry, that you need to be a W-2 employee, which means the church then withholds the amount that you designate to go to your retirement account, and it's not taxed. Sometimes the question comes up, what about 1099 employees? There is 1099 provision. I know we've talked about it, Ellen, and in regard to itinerant ministers and things like that, but that might be a little deeper in the woods than we have time to get into here today. But suffice it to say, if you're wondering about if you're a 1099 employee, can you save money for retirement? I'm saying the short answer is no. You need to be a W-2 employee. That's really a whole nother webinar that we would want to do for churches to help them understand why you should pay your pastors on a W-2 and not a 1099. So didn't mean to hijack the conversation, but I did see a couple of questions come up that I saw 1099.
Right.
So
Yes. Yeah, great addition. I appreciate that. The question was asked, can they share this webinar with friends who are in ministry that this might benefit? Most definitely you can.
Please.
We will be sending you a recording of this link of this webinar that will come to you directly since you registered for the webinar. For those friends of yours that you know in ministry that could value from this, please forward that link to them. Also drive them, as was mentioned earlier, to our website. We have a plethora of information there, and it's all free. It really is our ministry to those in ministry. So take advantage of that. Please share this with friends. Lots of good things under our Learning Center tab, lots of videos that are very helpful, and that's where you'll find the link that will be posted to this from this webinar. So yes, definitely do that. Guys, I think we could be here all day. We continue to get more questions in, but to honor the time of those who have committed to this time, I think we'll go ahead and end. I just want to thank you. We want to thank you again for your trust in us, for allowing us to take care of your finances. And we're just so thankful for this opportunity to partner with you in ministry. I do want to remind you of the IRS publication 517. We've mentioned that a couple of times, but if you want to search for it, you can just type in IRS Hub, PUB, .517. Lots of good information there straight from the IRS. And just also to mention, we're so thankful for your questions. Every question will be answered personally, and that if you didn't get your answer, and if you feel like you didn't get your answer and we don't email you, please reach out to us. We want to make sure you get your answers. Lots of questions about does this qualify or does this not? We'll make sure we get those answered. So hang with us, make sure of that. We will get to you. Before we close today, I'd love to just close us in prayer if I could. Heavenly Father, I thank you so much for each person on this call and their call that you gave them to ministry. Lord, we're so thankful to be able to partner together for working for your kingdom. May you today, Lord, offer peace, unbelievable peace and wisdom to these folks who are working so hard, Lord, to build and to grow your kingdom. Father, we thank you. We thank you for each person on this call, and we ask that you will bless them in inexplicable ways. In your son's name, we pray. Amen.
Amen.
Ellen, everyone,
Yes.
everyone, jfox@servantsolutions.org or dboots@servantsolutions.org. We'd love to one-on-one, if we can answer a particular question and you want a little more time, feel free to reach out. Our addresses are also on the website, but I just want to invite you all to reach out to us. Several people ask if you could get a hold of us personally, and we'd love to talk. First initial, last name @servantsolutions.org.